Gentlemen, good day and welcome to Ipca Laboratories earnings conference call of Q3 and FY hosted by DAM Capital. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agrawal from DAM Capital. Thank you and over to you.
Thank you, Ikra. Hi, good afternoon, everyone, and a very warm welcome to Ipca Labs Q3FY26 post-earnings call hosted by DAM Capital Advisors Limited. On the call today, we have representing Ipca Labs management, Mr. A.K. Jain, Managing Director, and Mr. Harish Kamath, Corporate Counsel and Company Secretary. I will hand over the call to Mr. Jain to make the opening comments and then we'll open the floor for questions. Please go ahead, sir.
Good afternoon. Thanks, Nitin and DAM Capital for organizing this call. Today's hearing call and discussions and answer given may include some forward-looking statement based on our current business expectations. That must be viewed in conjunction with the risk that pharmaceutical business faces. Our actual future financial performance may differ from what is projected and perceived. You may use your own judgment on information given during the call. Our domestic business for Q3 FY26 has delivered a growth of around 12% for the quarter. Mid-December 26, our rank continued to remain at 16th as per IQVIA. On both chronic and acute segment, we have outplaced the IPM. On overall, IPM has grown by around 8.9%. Ipca has grown by around 10.6%. On acute segment, the IPM growth was around 6.9%. Our growth is around 8.4%. On chronic segment, IPM growth was around 12%, and we have grown this business by around 15% as per IQVIA. Ipca's market share for the quarter continued to be remaining at around 2.08% mid-December 2025. Our export formulation business in Q3 has delivered a growth of around 17%, and for 9 months period, export formulations has delivered growth around 6% from 1,395 crore to around 1,477 crore. API business during the quarter was flat at around 317 crore. For 9 months of the current financial year, that business has grown by around 14% to around 1,051 crore from 924 crore. Q3 consolidated business has delivered a growth of around 6.5% to around 2,245 crore from 2,393 crore. And for 9 months of the current financial year, consolidated business has grown by around 8.44% to around 6,993 crore from 6,993 crore to 7,258 crore. Our standalone EBITDA margins for the quarter has improved to 26.09% from Q3 FY26 margin of around 24.25%. And overall improvement of around 1.81%. Consolidated EBITDA margin for Q3 FY26 is at around 22.15%, as against 19.87% in Q3 25, an improvement of around 2.28%. And for first 9 months of current financial year, EBITDA margins is at around 20.79%, as against 19.18% for first 9 months of last financial year, an improvement of almost around 1.61%. Having given the broad numbers, now I request participants to ask questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aanchal Jalan from Lotus Wealth. Please go ahead.
Hello. Around Unichem, our current cost of goods sold is 45%, and assuming it to stay the same in upcoming quarters, suppose the company aims to reach 18 to 20% EBITDA margins in, say, around 18 to 24 months, with operating leverage and some further cost cutting, can you provide a roadmap around the same?
Unichem business in last current financial year has faced some problem because they lost certain businesses in US and gained certain businesses. So overall Unichem's the business has grown by, I think, basic business what they were doing other than Ipca portfolio has just grown by around 2% in current financial year. And the businesses where it is lost is mainly which is a high volume businesses where the plants was also recovering a good amount of overhead. So that business loss has impacted little of Unichem's overall margins, and their EBITDA margins in this quarter is almost close to around 8% in the current financial year. Their European business is improving now, and now more and more filings are also happening. So in time to come, we hope to do better there. And as far as US business also, their overall business growth is good because of, let's say, the portfolio which they have got from Ipca. So overall, I think first 9 months of the current year, US business has grown by almost around 15%. And for the quarter, US business has grown by around 17%. Yeah.
But sir, for EBITDA improvement, can we have any roadmap around the same? Do you have any plans for it, for improvement in EBITDA margin?
Improvement in EBITDA margins will come from, let's say, higher utilizations of capacity, better US business, and which we hope to do in time to come. And also improvement in the business which is currently happening in Europe. Yeah.
Okay, sir. And regarding the proceeds that the company has of around 275 crore from the land sale, can you provide some color around that? Are there any plans around it?
Let's say that their cash flow was also impacted because of payment of European Union that fine which was to be paid on past issue of Parendopil. Some issue, so almost around 181 crore has gone there. So they have healthy cash flow right now. They are sitting with almost around more than 250 crore of cash in the bank, and currently there are hardly any expansion plan except the one solar project which is currently going on to use the more green energy, and that will have a capital outlay of almost around 50 crore. So other than that, they don't have any kind of major capital expenditure plan yet.
Okay, sir. Thank you.
Thank you. The next question is from the line of Surya Narayan Patra from Phillip Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. So my first question is on the promotional brands growth, what we have seen. I think this is such a strong growth after many quarters that we are witnessing. Anything that can be attributed to this growth, or is it to some extent led by the rupee depreciation factor?
I think West Africa has done very good business in this quarter, and overall I think for the whole of the year, West, which is more of a French-speaking African market and all, that business has grown by almost around 41% for the first 9 months, and in Q3 that has gone on by almost around 69%. So that's one business. Latin America has grown by 20%, Middle East Africa by around 27%, East Asia is almost around 36%. CIS business during the quarter has remained by and large flat. So overall business growth is good. For first 9 months it has grown by almost around 14%. But for whole of the year, we don't expect business growth to remain at even 14%. It's likely to be around 11% or so for the first 9 months of the current year.
Okay. Sir, relating to the domestic formulation business, so we have been outpacing the industry growth, and we have been one of the top 5 or top 10 players in terms of the growth. but it looks like that from the pharma track, it is the growth would have to some extent moderated for us also. And going ahead, if we see the GLP as a kind of a key growth driver for the industry as a whole, but we are not there on the first wave of the commercialization of the GLP. So given that, is it likely we would underperform to the kind of our larger peer in terms of growth in the domestic market?
We are also working for in-licensing, so yeah, we can come with the GLP. It's not that in-house we will not be manufacturing, but yes, we are looking for those kind of opportunity. And overall, let's say for us, this growth is going to remain better because the trend whatever we are seeing, that is better. Let's say our pain segment, which is over 50% now, is continuously driving the business. In this quarter also, pain has grown by around 13%. Our cardiovascular business, because last year we have, in the beginning of current year, we have done the reorganization. So first few months that growth was little lower because of restructuring. Now that business has also started delivering good growth, and I think for current quarter, cardiovascular domestic business has grown by around 16%. Anti-diabetes business has grown by 14%. So overall, that business is also good. In spite of anti-malarial declining by almost around 21% in this quarter, other businesses done really very well, like CNS business has grown by around 19%, Derma business has grown by around 22%, Urology has grown by around 17%, and other businesses, small businesses, which has also grown by 13%. So overall, let's say business is good, and we expect to continue to beat the market, yeah.
Okay. In terms of the gross margins, sir, there is a kind of meaningful positive surprise that we have seen in this quarter. Any specific quarter-specific factor that is there, or it is the rupee depreciation factor, or it is the product mix factor? What would have played this, and how sustainable that you think this gross margin that we can see going ahead?
Let's say overall gross margin is the function of overall top line growth. When domestic grows, when branded business grows, where we have good margins, even in generic businesses we have very good margins, and that business growth was also very good. Institutional business in this quarter is declined, but other businesses has grown very well, and we have very good margins there. So overall, for standalone, if you look at material cost to sales ratio has come down to around 24%. Material prices are by and large stable, slightly upward movement, but not very significant. It's all the product mix change and higher margin businesses growing higher in this quarter. That has also resulted in higher margin. And for first 9 months of the current year also, if you look at, we have improved by almost around standalone, I'm talking, by around 3.36 basis point, from 28.73% material cost in last year in first 9 months. Material cost ratio is around 25.37%. So almost around 3.36 percentage point improvement. And then this quarter, improvement is a little more. It is around 3.64%. But overall, I think it will remain for whole of the year, maybe 3.3 or 3.4% kind of overall improvement in the material cost to sales ratio, standalone for Ipca. Yeah.
Okay. Just last one point, sir, from my side. See, going ahead, in terms of our focus, what would be the key areas, like, see, whether it is the integrated manufacturing or optimizing the US or Unichem integration, or it is like capability build-up in terms of the biosimilar injectables, hormones. So what would be the kind of a couple of key focus area which should drive growth for, let's say, next 2 years?
All these are all focus areas, because let's say there are different teams, and this is the focus area for that. Let's say domestic continue to remain focus area. Branded business is also focus area, and also your generic businesses, because there are different teams who looks after that business, and they are and our overall filing is also building up in all these markets. R&D output has now increased, so that is also will have a in future that will also have a better impact on overall generic businesses, and also ROW filings are moving up. So we hope to do on all these businesses good in the time to come.
Okay.
And as far as your biosimilar business is concerned, we have now 5 candidates, and now we have already started process of technology transfer for 2 products, and hopefully that manufacturing will start shortly. Yeah.
That is even targeting advanced markets, sir?
That will target all global market. I think we have already taken opinion on our regulatory framework from UK MHRA. We have taken from European authorities and also from US FDA. So all the 3 agencies we have taken that opinion on protocols and everything. So everything is going on that line. Yeah.
Sure. Yeah. Thank you, sir. Wish you all the best.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Shashank Krishnakumar from Emkay Global. Please go ahead.
Hi, thanks for taking my question. So my first one was on the domestic API business. I think in our export API, broadly realizations have started stabilizing. But in the domestic API, just wanted to get some sense if the YOY decline is still largely a function of realizations remaining under pressure, or have volumes also sort of come down? Just wanted to get some sense around.
I think overall domestic business, we also do a lot of anti-malarial business. That business has little come down. That impact is there. And also some businesses on Serratiopeptidase, which were getting it manufactured from Krebs facility and all. So that has declined. So other than that, there is no meaningful difference overall.
Got it. So secondly, just on the margin expansion that we have seen this quarter on a YOY basis. So I think the Concall margin expansion is a bit higher versus what you have seen on a standalone basis. Though Unichem margins, I think, have come down. So wanted to get some color around what is driving that. And is it also sort of linked to the fact that the ex of Unichem revenue, if I look at it for other subs, that is a bit lower this quarter. So is that linked to that? I wanted to get some color around that.
Basically, it's a Ipca's standalone business that is driving, and also the nutraceutical business which we have in Tropic Wellness, that is also doing very well. So both these businesses has done well, and that is what is driving the business margins. Yeah.
Got it, sir. Thank you, and all the best.
Thank you. Participants who wish to ask a question, you may press star and 1 at this time. The next question is from the line of Dharmil Shah from Dalmus Capital Management. Please go ahead.
Hi, thank you for taking my questions. My questions are more specific on Unichem. In the quarter, our revenues have declined by 2%, and you've already mentioned that it's largely on account of market share loss in the key products. But that was already a part of H1 revenue. So is there any incremental market share loss in 3Q that we have seen?
No, actually that decline started from Q2. It will perhaps continue for 1 or 2 more quarters.
Okay. Understood. And how do you plan to regain the market share? Is it like a yearly thing that you get the business for this molecule?
Launching 4 or 5 more molecules in the US market. And we are also taking necessary steps to regain the market share where the market is lost for 2-3 major molecules. So suddenly, because of increase in the competition and price reduction, they lost some business. So we will recover that business. It may take another 1 or 2 more quarters.
These contracts usually are for 1 year, or how frequent?
Not necessarily. 3 months, 6 months. It's not hard and fast rule. Everything is for one 12-month contract.
Understood. And what gives you confidence? Is it gaining market share in the same molecules, or is it the new product launches?
In the same molecule also, we will recover our market share, whatever we have lost. albeit at a lower price. Plus new products also they are continue to launch in the marketplace.
Understood. So should we assume that gross margins and overall EBITDA margin should be under pressure, although we might
maybe 1 or 2 more quarters it will be definitely under pressure. From there on it should improve.
Understood. And post that as well, if we are bidding at lower prices, then gross margin should be under pressure, right?
No, but they will be also doing some Ipca business which is shaping up and growing well. So Unichem is our marketing partner in US and we have already launched 5 molecules, in which over a period of say 1.5 years we have now have a lot of market share, and another 4 or 5 more Ipca molecule also get launched in the US market. So Unichem US will also have that benefit going forward.
Understood. And these Ipca molecules, how big the business could be in next 1 or 2 years? Just to get a rough sense.
We were doing about 10 molecule business in the US 7-8 years back. We were doing about 300 crores.
Okay.
So out of that, we have currently launched around 5 molecules, which are all backward integrated. Another 4 to 5 molecules will get launched in the next 6 to 12 month period.
Understood. Got it. And just a broad sense, how do you see Unichem's growth for next 2 years, FY27, FY28? Now that FY26 is almost over.
Unichem growth and margin will improve once whatever filing they are doing currently in the Europe and all will get registered, and those products will come in the marketplace. They are also doing many registration in the ROW branded space. So all this will cumulatively help them in growing their business and margin over a period of next 2 to 3 years.
Now, if we were to give the guidance, how much growth do you expect from Unichem's business on the top line or EBITDA?
See, once this whatever market loss they have in the US gets recovered, then over a period of time, they should grow their top line anywhere between 8 to 10%. And our aim is to reach EBITDA margin to begin with around 15%, maybe in 2-3 years' time. Okay. And gradually improve it to about 20% when all their filing and registrations will come in the European market, and that business will grow.
Understood. But that European business,
they have a lot of capacity in their manufacturing plants. Once that starts getting utilized, their margins will automatically improve.
Understood. But the Europe business will take time, right? Because we have just filed the application.
Takes anywhere between 1 to 2 years. So filings are happening. Few are already filed. Few more are getting filed. So it will take some time.
Understood. Got it. And 8 to 10% you meant for US business or the overall revenue growth?
No, overall I am talking.
Understood. Yeah. Thank you so much. This is really helpful.
Yeah, thank you.
Thank you. The next question is from the line of Nikhil Mathur from HDFC Mutual Funds. Please go ahead.
Yeah, hi. Thank you, sir, for this opportunity. So 2-3 questions. So first I wanted to ask on the branded formulations in exports. I'm talking about Ipca ex Unichem. So you have given some sort of guidance for this year at around 11% growth. You mind giving some outlook for FY27 and 28 as well? And how do we see the business shaping up from a 3-5 year perspective?
Let's say our promotional branded business is very stable business, except when the currency goes for a toss in the market, it's only around that time this business get impacted. So I think overall this promotional branded market should continue to have around 10 to 12% kind of growth over a longer period of time. As far as generics are concerned, I think we will now grow faster in Europe, and US also growth will be faster. So overall generic businesses we expect around similar kind of around 10 to 12% kind of growth. API business will have little lower growth, and domestic business is also around 10 to 12% kind of growth. So overall the company, the growth is around 10 to 11%. That is what is the overall broadly. And detailed guidelines we will provide on the overall business and margins once our current year's budget exercise and that is complete by March, and thereafter we will give you the detailed guidelines.
So promotional branded, I understand. On the generic side, sorry, I didn't understand. So you are saying only a 10-12% growth despite the US from Ipca standpoint coming back, right, of that 300 crore business that were discontinued 6-7 years back. So any particular reason why the softness on the generic formulation side that despite US coming back?
It's basically uncertainties on the institutional business. That is what we are keeping in mind.
Okay. X of institutional, what will be the outlook if I keep aside a tender business?
Maybe 1 or 2% more, yeah, growth.
Okay. Got it. Okay. So if I look at the EBITDA margin trajectory now, I think EBITDA margin this year, if I again exclude Unichem, it is kind of trending better than what you have been guiding in the last couple of quarters. So any particular reasons why the margins are coming in better, especially on the gross side? And given that there's a big improvement now over the last 2 years on the EBITDA margin side, is there still scope for margin improvement in FY27 and FY28? I'm talking about ex-Unichem.
It's a function of top-line growth. If top-line growth is around 10 to 12%, margin will definitely improve by 1.5% plus.
1.5% per year or over a 2-year period?
Every year.
Every year. Okay.
Yeah.
So there is a potential of 300 basis point margin improvement in next 2 years, provided the growth remains at 10-11%.
Yeah.
Got it. Thank you, sir. This is helpful.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 at this time. To ask a question, please press star and 1 now. Anyone who wishes to ask a question, you may press star and 1. The next question is from the line of Chirag from DSP Investment Managers. Please go ahead.
Yeah, so thank you for the opportunity, sir. Where are we on the US business? If you can talk about the third quarter run rate. I understand that this is subsumed in the Unichem revenue, but you don't give it out. You don't give us the regional split for Unichem. So for our Ipca US business, where is that number? And if you can talk about 9-month and 3-month, and what is the outlook there over the next couple of years?
In last quarter, Q3, the US business was almost around 395 crore. Consolidated, I'm talking Ipca and Unichem put together. And Q3 25, that business was around 339 crore. So there is a growth of around 17%. All this growth in the US business is largely because of Ipca portfolio. Ipca portfolio has of its own product, and Ipca portfolio which was there of Bayshore under for which third-party products which we were trading around that time. So put together, that business is grown by around 17%. Overall, if you look at first 9 months of the current year, that business is almost around 1,140 crore. And last year, that business was around 990 crore. So there is a growth of almost around 15% in the US business. And most of this business growth is by and large because of either Ipca portfolio and portfolio of which Bayshore portfolio which has gone to Unichem. Yes.
Sir, can you talk about the Ipca manufactured product portfolio, please?
That
similar numbers?
I think overall around 10 to 11 million kind of business they have already done. Yeah.
In 9 months.
9 months, yeah.
Correct. And what is the exit run rate, sir, in the third quarter?
Business is going to be better.
Understood. And how are we thinking about this business in the next couple of years, sir?
Mr. Kamath has already spoken on this matter, yeah.
Chirag, we have about 35 registrations, out of which 5 we have commercialized. Another 5 to 7 molecules will get commercialized over next 12 to 15 months. So gradually every year we will be adding 5 or 6 new products in the US market of Ipca portfolio.
But you don't want to give a revenue number.
See, the thing is, to get a market share after launch of product, it takes very long time. See, whatever 5 products I am today marketing, it is almost now 2 years. And now we have reached a market share, most of the molecules 25% plus. Because they are all our backward integrated molecules, and there is further scope to improve market share on these molecules itself, the 5 what we are now marketing. So there is a opportunity, and we are working towards that.
Understood. And just one feedback, sir, incrementally, sir, if you can also, for Unichem, provide the geographic mix of top line, that will help us evaluate the business better on a quarterly basis. If you can do that, that will be helpful.
See, almost 2/3 of their business is from US. Other than that, they have a small ROW branded formulation business, some API business, and generic business, especially in UK and 1 or 2 countries of Europe. That's all.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Kunal Randeria from Axis Capital. Please go ahead.
Hi, good afternoon, sir. Sir, I still don't understand the gross margin. Excluding Unichem, it's already in mid-70s. I think very few pharma companies report these kind of margins. And also given the fact that, the API business would be facing, lower gross margins. So just want to understand, because I think a couple of years back it would have been high 60s. So what is driving it besides currency? And secondly, what is the ceiling, to this number?
It is pure product mix, nothing else. Wherever margins are better, those businesses are growing faster. For example, in the domestic business, our chronic segment is growing faster than the acute segment where margin is less because most of them are anti-malarial business. Similar thing in the international ROW market also and generic business also.
No, I understand the product mix. Sorry, sir, to push you, but I mean, mid-70s margin, like this, is it because
Hello?
Hello? Kunal, your voice is muffled.
Sorry, is it?
Hello?
I will rejoin.
Yeah, rejoin the queue, please. Thank you. The next question is from the line of Sai Om Mukherjee from Nomura. Please go ahead.
Yeah, hi sir. Good evening. Just one question I had. Have we started making filings for the US market from the Ipca side? If you can share how many filings have been made and if any opportunity there you see over the next 2-3 years.
I think current year we have already made 4 filings, and I think annual basis also around 5 to 6 filings would happen every year.
Okay, and when do you see these new filings getting commercialized, if you have any timeline in mind?
It will all depend on approval timeline, but let's say we still have, I think, we have over 30 filings and we still have around 8-10 approvals still pending, past approvals, and thereafter the new filing approval. So it will all depend on how the filing mature, approvals start coming in. Based on that, it's difficult to give right now the numbers, but yes, it all will depend on that.
Okay. Sir, any colors you can give on the your European business? There was some issue in the past. How do you see growth in the unbranded generic outside of US? You can give some color.
Let's say most of our businesses are happening in smaller geographies in Europe, Australia, New Zealand, Canada. And that business is good business. We have very good margins and all. We have some business in UK. That business was fiercely competitive. And practically in that market, there was a bloodbath on pricing practically. A lot of products were selling at losses in that market. But last 1 month, we have started seeing a sharp recovery again in prices. And the recoveries are as high as 30-40% kind of recoveries are seen. So it's only that kind of sometimes probably in the market when the inventories become large, people just try and dispose of the materials, short expiry materials and all that, which kills the pricing. So I think last financial year, most of our portfolios was facing that kind of problem. But now we are seeing that much better recovery, and we hope to do better business there. But that's the lowest margin business we have in generic market. By and large, our the business which are coming from Scandinavian countries and other smaller European countries, we are not there currently in Germany. We are not there in France or Italy or those kind of markets, but we have good presence in Spain and other markets. And the overall margin profile is far better. Okay.
So just one last question, if I can ask. You talked about your margins have improved. We have seen improvement also. You mentioned you should see 150 basis point expansion in EBITDA margin. For the steady business that you have in India, I don't know, you don't spell out the margin number for India, but if you can talk about, if you can give that number, it would be great. Otherwise, qualitatively, you can talk about how the margin in the domestic business has been faring. Has it improved significantly, steady? Or if you can give some color around, how the domestic business margin is faring.
If you look at overall, our highest EBITDA margins come from promotional branded business in international market. The second level would be there is a domestic business. Third will be generic business, which we do other than UK. Then comes is the institutional business. Then last will be UK business, and thereafter API business. So margin-wise, if you look at the domestic business, the branded business would be second for us. Yeah.
And how is it trending, sir? I mean, if you can give some color there. And what is your expectation? Because that's a pretty steady business, right? You would continue to grow at 10-12%, you mentioned.
Let's say in promotional branded business, our material cost is very, very low. It's maybe 10-12% kind of material cost. So any improvement in that business, similarly, since our domestic business is also now anti-malarials and all these antibacterials are very small part of it, and we are more going towards the CNS, urology, cardiology. That's the kind of business which is growing faster. So margin profile on that is also improving significantly. So overall, at 10 to 12% growth, it's very easy to improve overall margin by around EBITDA margin by 1.5%. The quality of business is that way.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Harsh Bhatia from Bandhan Mutual Fund. Please go ahead.
Yeah, so thank you. Hope I'm audible. Yeah. So in terms of the comments for the European market on the pricing part and the recovery, most of the pricing deterioration, there could be multiple reasons, but most of it was led because of tariff-related issues and dumping, or was there anything particularly one-off to that angle? If you could spell out some reasons as to why there was significant pricing deterioration in the European market, and is it more sustainable in terms of the recovery that we are seeing in the last 1 month?
My comment was only for this UK business, not on European business. European business is very steady and absolutely no problem. My comment was only on the UK business.
So, in terms of the in terms of the clarification for one of the comments you made, this is for the US business. When we are guiding for the Unichem growth, I think 8 to 10% or 9 to 10% for the next 2-3 years, this is pure Unichem growth, right? Are we building in or are we assuming Ipca US sales driving the US growth for the Unichem business? Is that the case, or we are just assuming pure Unichem US division to grow by itself?
We've already said current financial year, first 9 months, Unichem US business, their own portfolio is lower because of loss of market share in 1 or 2 molecules, which they hope to regain maybe in another 2 to 3 quarters time. So on a standalone basis, once they regain that particular market share lost, they should also grow in their portfolio by 7 to 8% annually going forward, with launch of 4 to 5 new molecules next 2 to 3 years.
Okay, sir. Thank you.
And over and above that, whatever growth will come in the Ipca US business also will be their growth in the US market.
So.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 now. To ask a question, please press star and 1 now. Anyone who wishes to ask a question, you may press star and 1 at this moment. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
No, madam, we can close the con call. We have answered all the questions. There is nothing more to add.
Okay. Thank you. On behalf of Ipca Laboratories and DAM Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.